from nearly 70,000. Every time Bitcoin stops falling, the hodlers are convinced a bottom is in. And in fact, whenever there's a small rally off that bottom, they get very excited that Bitcoin's about to moon. Those hopes end up getting dashed, and that's what a bear market does. It slides a slope of hope. What I think is actually happening with Bitcoin is not base building, but consolidation of the previous down leg, preparing for the next leg down, which I think is going to take Bitcoin closer to 10,000 before we get a bounce. And then, of course, we'll get another decline. My guess is that we're going to fall below 5,000 before the end of the year. Maybe we won't close below 5,000. Maybe we'll get yet another dead cat bounce. But clearly the bubble is popped and the air is coming out. It's just that most people are still in denial. But the real problems during the week were not in Bitcoin per se, but in the crypto industry as we continue to get the fallout from the FTX debacle. Because remember, all of these companies are interconnected. There's a lot of counterparty risk going on, and we're starting to see the buildup of a financial crisis within the crypto ecosystem. And this reminds me of the financial crisis in 2007, 2008, which started with subprime mortgages. And when it initially started, everybody assumed it was contained to subprime. I knew that it wasn't, but the reason it started in subprime was that was the weakest link of the chain. And so it cracked first. It was the most speculative part of the mortgage market. Well, the financial crisis that is now going on in crypto, we're going to see this in other parts of the economy. It's not going to be caused by crypto because the subprime crisis didn't cause the overall financial crisis. It was a tip of that iceberg. There was going to be a crisis in prime mortgages as well. It just happened a little later. And that's what's going to happen with the U.S. economy. It's the higher interest rates that ultimately sparked the financial crisis that we're seeing in Bitcoin, because we already saw a bigger drop in the collateral for a lot of these loans, which were crypto. Well, crypto has collapsed. The market cap on cryptocurrencies has dropped from 3 trillion at a peak to under 800 billion. And therefore, a lot of loans are going bad. And also, as people are losing confidence in these crypto exchanges, there's basically a run. People are trying to move their crypto off of these exchanges, and that's creating bigger problems because it's like a run on the bank. Except with normal banks, you don't have the run because you have the government insurance. So people are not worried. So they leave their money there because the government's got their back. Now that's a problem. Because of those government guaranteed bank accounts, the banking system is inherently a lot riskier because banks take on all this extra risk because they know their customers don't give a damn, and they don't give a damn because of the moral hazard of government insurance. But we don't have that in crypto. So a lot of people are playing it safe and they're trying to withdraw their money. That's a problem when a lot of these companies have loans and that crypto is collateral and now their customers want it back. So we're starting to see all this unraveling in that space. Look at what's going on with Gemini, which is owned by the Winklevoss twins. That is one of their companies. They had a subsidiary called Earn, where you can deposit your Bitcoin or other cryptos and earn interest. Well, how did they earn interest? Well, there were loans involved. I think they were loaning money to Genesis, which is owned by Barry Siebert's digital currency group. It also owns the Grayscale Bitcoin Trust. Well, they loaned out money. I think they have exposure to FTX, so they lost a lot of money. So now they can't pay back the money they owe Earn. And so Gemini is in trouble. They're all halting redemptions. Everybody is laying off staff. Genesis announced that they're getting rid of 30% of their staff. The whole industry is under intense pressure. In fact, the biggest shoe to drop this week, I think, were the huge losses at Silvergate Capital, which is a crypto bank out on the West Coast. And that stock dropped 30% on the week. And that includes a 27% rally that they had on Wednesday. Now, that rally reversed on Thursday when the company reported this massive loss. I think they had $8 billion of their deposits gone. And they had to sell a lot of their assets at fire sale prices, although maybe in a few months they won't look like fire sale prices, but they lost so much money liquidating these assets that they more than wiped out all the profits that the bank made for the entire history the bank has been in business, just in 1 year. The stock price is down better than 95% from where it was trading at its highs last year. So what's going on in the crypto space is not only problematic for all the people that work there and who are losing their jobs there, and I predicted that this was going to happen. I also predicted that a lot of the people who are losing their jobs at Genesis or Silvergate, they're going to start selling their cryptocurrency because that's what they own. These guys drank the Kool-Aid. They worked for crypto companies because they believed in crypto. And because they believed in crypto, they put their money where their mouths were and they own it. Well, now in order to put food in their mouths, they're going to have to sell the crypto because the grocery stores don't want Bitcoin. They want dollars. And if you got Bitcoin and you want to eat, well, you got to sell your Bitcoin. Well, the problem is we are running out of people who are willing to buy Bitcoin. Either the fools have run out of money because they've already bought too much Bitcoin, or we've run out of fools and there's nobody left to buy. While I'm on the topic of fools, though, look at what happened with Bed Bath & Beyond. That stock dropped 48% this week. It was already way down, and it dropped another 48%. It closed at $1.31 because the company announced that they're about to file for bankruptcy. Now, Bed Bath & Beyond was one of these meme stocks, and in fact, it had another meme stock rally in August of last year. Even though this company was obviously in a lot of financial trouble, that didn't stop the meme speculators from buying it, and the price got all the way up to $30 a share in August of last year. And here it is, less than 6 months later, and the stock is almost below $1 and headed for zero. So a lot of people who just mindlessly bought into this mania are now the bag holders. And it's not just bag holders in the meme stocks, it's bag holders in crypto. Everybody who does not sell is going to be a bag holder. But the latest piece of crypto news came out yesterday when the Attorney General for the state of New York announced that she had filed civil charges against Alex Mashinsky, who was the founder of Celsius. And New York is suing Mashinsky for fraud. They're claiming that he defrauded Celsius customers in that he didn't tell them about all the risk that he was taking with their deposits. He downplayed the risk. He represented Celsius as a conservative alternative to banks, where the little guy can get in on all the money that the rich guys have been making. And he was taking care of the little guy. He was kind of like Robin Hood, taking from the rich and giving to the poor. And all this was just a fraud. And so he's being sued for the billions of dollars that customers lost based on this fraud. And what's so interesting about this is the Attorney General of New York is acting like she just discovered this. Like, okay, it's a good thing we've got these regulators now that have finally discovered after the fact, because the company blew up months ago. Everybody already lost their money. And now, right, all the horses have long since left the barn, and now the regulators are rushing in to shut the door and say, you see, we're on the job. It's a good thing that we're here. We have discovered this fraud, and we're making these allegations. Except I uncovered the entire fraud on a live debate on the internet over a year ago. In late 2021, I did a debate on Kitco, and I've talked about that on this podcast with Alex Mashinsky. And I didn't know anything about Celsius. And during the debate, he lets out that he's paying people interest on their Bitcoin. And he's even paying interest on gold. Something like 6% is the approximate rate. And I said, wait a minute, how are you paying interest on Bitcoin? Bitcoin doesn't generate any income. How are you paying interest? Well, we now know how he was paying interest. He was loaning out the Bitcoin. And the people who borrowed the Bitcoin paid interest to Celsius. And then Celsius paid some of that interest to its customers. Obviously not all of it, because Mashinsky wasn't running a charity. So if he was paying, let's say, 6% interest on Bitcoin, he was probably charging people 8% or 10% to borrow the Bitcoin. But obviously, if somebody is borrowing Bitcoin and paying 8 or 10% interest, they're taking a lot of risk. After all, why didn't those borrowers go to a traditional bank and get a loan at a much lower rate of interest? Because they probably couldn't get credit because they were very risky borrowers. They were so risky that the only one dumb enough to make them a loan was Celsius. So clearly, in order to pay interest to depositors, he was taking a lot of risk. And I said on this debate, you must be taking an incredible amount of risk in order to pay these yields. And his response to me was, no, we're not taking any risk. And I said, well, of course you are. That you can't be telling the truth. You must be taking risk. And he was, because that's why everybody lost. Because the people who borrowed the Bitcoin weren't able to pay it back. And this was obvious. I could see it from a mile away. Plus, if you borrow the Bitcoin